All right. Hey, thanks, Dave. And thank you, traders, for being here. I always enjoy coming to the Festival of Traders and presenting. And today I'm going to talk about how to read charts with no indicators. Now, everybody uses indicators. I do too. But, I've been coaching traders for years. And, I've just seen kind of an over-reliance sometimes. And sometimes, charts that are just obscured. You can't even see price action for all the indicators there. Before I proceed, let me give you a quick introduction. So I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been trading, investing, I should update that, over 30 years now, actually. I've been running Follow Me Trades for about 10 years. I do trader education. I have a swing trade alert service, and I run a daily market trade room as part of that service. And I'm a trader. I trade my own money. I trade the markets, and I enjoy talking to traders, talking about trading, sharing ideas. So, that's who I am. So again, today we're going to talk about how to interpret price action with no indicators. And I like to say price action is the truth, right? Price and volume are the only realities in the market. They actually happen, right? Shares sold, right? A certain number of shares sold for a certain price, right? All indicators are derived from price or volume and over some time period. So they're synthetic to varying degrees there. Indicators can help us interpret price action, but again, I think over-reliance on them can be, kind of misleading. I think, the first thing you have to do is look at price action and make some observations, interpret it a bit, and then use some indicators to help confirm that or clarify that, right? So I think reading price action is absolutely foundational to successful trading. And I'm going to walk through into a little teaching, how I use what I do to interpret price action with no indicators. Let me demonstrate it first. If somebody type a symbol that you would like, and I'll bring up a chart on Thinkorswim with no indicators, and we'll do some quick analysis. So I think I can see, Dave, if any of the participants type in a question there. Is that visible to me? There's questions. Okay. So the first one that came up was Bank of America, BAC. So let's look at that. So here's Thinkorswim. Here's a daily chart with no indicators whatsoever. Okay. Let's look at Bank of America. So the first thing I'm going to do is look at a big picture. This is a daily chart. I'm looking at a 5-year picture of Bank of America. I just want to see that big picture, right? Often I see traders when they're doing analysis, right? They'll zoom into, kind of current price action. And, that's where we're going to make a decision probably. But I just want to see this big picture. So again, I start with 5 years worth of data, and we just make some observations, about Bank of America. And we go, wow, back in 2022, kind of hit an all-time high up at 50, pulled all the way back, lost half its value down to 25. For late last year, this year, it's been an uptrend. It had a correction. It's heading up, and now it's going into a bit of a channel. So that's an important observation, right? And I can also go, okay, we had this is a pretty good up move, right? From $25 to $45, and then a pretty good correction. And we can actually use, whether you believe in Elliott wave or not, and some people, people can overcomplicate it, but the idea of a Fibonacci retracement, which is part of Elliott wave, right? This is a powerful tool. That's not an indicator, right? That is a drawing with some values. Okay. So this made this big move up, and it corrected right into an expected Fibonacci retracement zone, which are these green lines, and then it started back up. So that's an important observation. Right? After a big impulsive move and a correction, the expectation is for it to go up. Now let's drill in to current price action. I'm going to compress that just a little bit because I see something here. Okay? And what I see here, this isn't a perfect one, right? But what I see here is a bit of what we call a wedge forming, and I can just use a drawing tool, right? No indicator. Right? This is just a trend line. I can see this, and if we go from here, kind of this, and I got to kind of cut through a body. I didn't draw it perfect, but the point here is you can see that the swings are decreasing in amplitude, and this is like a coiled spring. So as these get tighter and tighter and tighter, there's typically going to be a breakout from this. And whichever way it breaks out of this, there will typically be a short-term follow through. So it breaks out to the upside, at least the next handful of price bars probably higher. And the other way if it breaks to the downside. And the other thing I can observe, I'll just get rid of these so it doesn't get too cluttered, is if it does break to the upside, I can observe just using a horizontal line, right, in the recent time frame, which would be, that's last month, this month, right? There's a pretty significant resistance level right here, about $40.95. We can call that $41, right? Prices come up to it, reversed, up to it, and reversed. So if we were to take a long on this wedge, if it broke out, there's some resistance, right? That's real. We can just observe it. Now, when price breaks through a resistance level, then it can be, wow, something's really changed. But for the short term, price has reversed there before. So do I want to go long right into a strong resistance level? Yeah, maybe not. Maybe not. And there's also a support level. There's a pretty good pivot right there. Price went down to it and reversed up. And now that I've drawn these two lines, we can see for this period, really last month and into this month, what would we call this, right? It's a channel, right? There's a series of high resistance areas, low support areas that Bank of America has moved through, right? So you can actually trade the channel, right? If it goes up here and it does reverse again, well, you could go short and have, some expectation that it would go somewhere near this support level, right? Again, do you want to try and trade long into a pretty strong resistance level? Yeah, I think I don't. Okay. So we just did, quite a bit of analysis here on Bank of America, right? And drew some real conclusions about trading it. And, when we might want to or might not want to, right? How we might want to trade it, right? Maybe some potential target or stop levels, right? We did all of that with absolutely no indicators. And again, I'm not anti-indicator, I'm anti-over-indicator, if you will, okay? So thanks for Wayne for typing that one in. And now let's just, I'll do a little bit of teaching, right, on how we can do this, right? So again, I think price action is, it is, well, it's the only reality, right? Price and volume are the only realities. Everything else is some derivative of it, right? So what can you do without indicators, right? Well, you can determine the major trend direction. You can determine if you're in a major trend or correction. We showed on Bank of America the recent big trend up and then the correction down, right? You can tell if you're in a channeling pattern, which we saw. You can see if there's a channel breakout. You can look at gaps. You can look at wedges. They're called wedges or banners. It's the same thing. Did it break out of a wedge or banner? Is there a new trend starting? Is there a mature trend ending? What are the support and resistance levels inside price bar? I'm not a big candlestick pattern guy, with the, the hammers and the stars and the dojis and the, whatever, all those things. But inside price bar actually is a powerful setup. That's a, a 2 price bar setup, right? And much, much more. But you have to be able to see the price bars and the price action on your chart in order to read it. And again, I've encountered, a surprising number of traders who have so many indicators on their chart, all right, or whether it's overlaid on the price action or there's little subgraphs, and there's so much that you really can't even interpret price action. I just think that's a mistake. And at a minimum, if you like all the indicators, have a separate chart that's a little bit cleaner, and then make some observations, and then you can go apply the indicators of your choice, right? Okay, so that's quite a bit that's possible, right, with no indicators whatsoever. There's tools that are free. Every charting platform that I've ever looked at, and I've used a lot of them, right? There's stuff that's on your chart for free, right? There's drawing tools, horizontal lines, vertical lines, trend lines, ellipses. You can use different colors, right? You got Fibonacci tools. You got text tools where you can make some notes. You can have alerts set up as well, which is super helpful, right? If you see a pattern, well, if that, I'm looking for a channel breakout, I'm looking for a wedge breakout, you can set a price alert and go, well, notify me if that happens, and I'll come back and look at it. Maybe I would want to trade it at that point. Okay? So marking up your charts using these drawing tools, I think is valuable. Because then, I don't know about you, but I look at dozens of symbols, maybe pushing up, 100 symbols or something a week. I can't remember all that. I got a little steno pad. I make notes of the really, really good ones. But if I can draw some stuff on a chart, like Thinkorswim, when I pull the chart back up, there it is. It's like, okay, yeah, that's what I was seeing, and how's that developed? So I think that's super valuable. And just, use the tools to come with your charting platform. They're free. Okay, so the first step, and I did that with Bank of America. You saw me, hey, okay, we're a little bit zoomed in here. Let's zoom out. Let's get the big picture. What's going on with this thing? What's the major trend? And I'm going to show you a way to, are we in a trend? Is it continuing, or has the trend failed? Has the new trend started? Has the old trend ended? There's some very, very simple techniques you can use to observe and confirm that, right? Confirm or deny it, right? But get the big picture, right? And what you don't want to do, I think, if you start off zoomed in too much, right? Everybody's heard the story of the 6 blind men and the elephant, right? They all were touching different parts of the elephant, and then because they had incomplete information, they drew the wrong conclusions about the elephant, right? It's this, it's that, it's this, it's that, right? And so we don't want to do that. We want to get the big picture of what's going on with a particular security, so we can just understand it and have as much information as possible to draw the right conclusions. So I don't want to spend my whole time here on slides, right? I'm a trader. Let's look at some charts. Okay. So back to Thinkorswim, and type in any questions, by the way, as we go along. I'll field them on the fly. I'm happy to. All right, so we were looking at Bank of America, right? Let's look at PayPal. All right, now here we're zoomed in on PayPal, right? We're looking at a couple months worth of data, and our observation about PayPal, if we're just looking at this zoomed in view, would be, well, it was going a little sideways, drifting down, and then it's had a pretty strong move up. That would be our observation, right? If we zoom out and look at the big picture on PayPal, it's going to tell a much different story, right? Right? PayPal, for a long time was a e-commerce darling, right? Up here, it looks like in 21, put in a really strong high, pushing up, $310, $315, right? And then kind of fell out of favor, right? And lost, over 2/3 of its value. And since then, it's been drifting down. You can tell it was channeling, just kind of bumping along the bottom. And now that zoomed in portion goes, okay, now it's starting to come up off the bottom, right? But this is a way different picture than the zoomed in version. And I just want to be aware of that. It's like, and at one point the market thought, the market cap of PayPal was up here. Now they think it's here. Okay. Well, that's good to know. But I do zoom in then and go, okay, let's interpret the current price action and see if there would be some kind of trade. Everybody's got their own trade setups and what they're looking for and what makes sense to them. That's makes sense, right? But what I do want to show here on PayPal is for a time, quite a bit of time here, it was in a channel, right? Pretty clear boundaries on this channel, and we just use horizontal lines. Well, here's the upper boundary, right? And then here's the lower boundary. And so for each of these red lines is a month, right? For 1, 2, 3, 4, 5, 6, 7 months, PayPal was in a pretty pretty narrow channel, right? Just up and down, up and down, up and down, back and forth, right? And I said you can trade those channels. It could be a little difficult, and you have to determine if there's enough profit to make that worthwhile to begin with, okay? But then what happened, right, was a channel breakout, right? Here had been this multi-month channel, and then it broke. I don't typically like to take the first break, right? Because this typically happens, right? You get a breakout and then a pullback. And it didn't pull back perfectly to the top of this channel, but if we were to, we got the upper channel marker kind of at that outlier. If we kind of take a mean between the outlier here and these prior highs, right, we can see that kind of was a support. So quite often, what was resistance can turn into support. So this broke out, in this area there was support, and then it went again. And this is a pattern I really, really like. Okay, break out of a channel, pull back, resistance becomes support, and now the trend is taken off. Okay, I'm long PayPal. I like this one. Okay, so I think it's good. And then another thing we can use, just these free drawing tools that are on every platform, right? I like to mark my chart up, and like I got into PayPal at 79.30. Okay, that was last Friday. So I'm just gonna, I just use the same markings. I get in, the price I got in at is marked at light blue. I have a stop. I put my, the predetermined exit point. When I say stop, it doesn't imply, a stop market order. It means where am I going to get out? What would be the point where this trade had failed, right? So I have my predetermined exit point at 76.03. And I make that red because if it hits that level, that's not good, right? And then I have a target. I don't go into any trade without a target, and I use a variety of methods to determine a target. In this case, it was a prior high back off to the left, which was a potential resistance area. 87.50 is my target, and target is like green because that's like profit. Okay, and you can look. I always have an entry price, a stop price, and a target price, and I always want a positive reward to risk, right? So the distance from my entry to my stop is here. The distance from my entry to my target is here. This one's like 2.5, 3 times, right? So I gotta, call it a 2.5 reward to risk ratio. Boom, perfect. Right? And by the way, this is up. I got in Friday as it, hey, it reversed, right? Off a support level, broke out of the channel, went up, came down to support, it's taken off. Okay, I like it, I'm in. And I took the October 78 calls, and those are in 52% profit in just a couple days, and we got more to go. Earnings isn't for a while, not till the 29th. So this looks like it's going to be a decent winner. So again, no indicators, and I do use indicators, and I'll show them here toward the end. But I could make this trade and this setup and this analysis with absolutely no indicators. Let's look at Exxon Mobil, XOM. So again, big picture. Okay. Big picture on XOM is, okay, wow, it drifted up for a long time. These lines indicate years, so that was 2020, 21, 22, 23, and it dipped out, and then in 24, it's kind of putting in some highs. Okay, now I always look for channels, and there was a kind of a longer term channel going on, if we look to the left of 2024, right? Like all of 2023, that was a pretty wide channel from $95 to $120. But it stayed pretty much in there. And then in 2024, it broke out temporarily, then came down, and we can see now there's kind of a narrower channel. So let's zoom in on this, and we can say, okay, there was a, in the last couple months, pretty narrow channel. Right here, this is a pretty narrow channel. It broke out of it, came back, broke again. Now it's broken up. So I showed you on PayPal, I like that, but I'm not going to take the first break. It broke up, pulled back, and remember I talked about when resistance becomes support. Well, that's something new happening, and that's super interesting. So today, XOM is up, and if it's up tomorrow, I'll probably go long on it, right? I'll put my stop here at this reverse point, which is now support, and I'm going to try and take this up, right? And you know, where would the target be? This one's a little tough because it's kind of making new highs. So there's no other, you know, kind of prior high that would be maybe a resistance area. So this one, I can't use prior price to help me determine a target on it. I might use a simple Fibonacci extension and say, well, it's time. Well, we had this move up, and we had this pullback, right? And so a Fibonacci extension is just using math, going, you know, the probability based on, you know, years and years of research and market behavior. If we had a move up and then this down, if it goes up, here would be the zone, right? So I would just put a simple target in the middle of this extension zone, right? And, you know, if my entry is going to be, you know, say it's up tomorrow, it's here, my stop is here, that reward to risk totally works for me. So that could be good. No indicators, just observing price action there. Okay. So let's look at CCL, Carnival Cruise. Oops. Why isn't this working? Okay, you know, the cruise lines, you know, post, you can see off here, that was the pandemic, right? They've been all over the place since the pandemic. So we go, yeah, it was totally chaotic, right? Totally got crushed, started coming back, got crushed even worse, you know, pretty volatile move up, a little tough. But what's super interesting and why I brought this one up, again, this is a channel break. And maybe by now, just, you know, in the time we've been here talking about this, maybe you see exactly what I'm talking about, right? What we had here was a very clear, very repeatable resistance area. Look how many times price came up to this. Up, reverse, up, reverse, up, reverse. Oh, we just broke out. So that's super interesting, right? We just broke out of, you know, a multi-year, very strong price resistance level. So what I want to see, again, I'm not going to take the first break. I want to see it go up, come back, and that level now becomes support and it goes up again. I'll be in for that, okay? I just think that's a higher probability. When you get a breakout, there's typically a pullback. So I just want to see that play out. Take a little while. Gaps are super important, right? You can observe a gap with no indicators. Here's a great example, Intel Corporation. You know, kind of a sad tale. I'm not even going to go big picture on this one because I'm not trading Intel at this time. I worked for Intel for 14 years. It was a great experience, great company, but they're obviously struggling if you're following that story at all. Okay, here's a gap, pretty clear gap, right? And I just use an ellipse to draw it, so you know, we can come back and look at it. So there's an ellipse that I've drawn in. You know, what's a gap? Right, the price of a security is based on, you know, what the market thinks the company is worth. You know, typically securities analysts use a 5-year free cash flow discounted model, right? How much free cash flows are going to be over the next 5 years, and what's that money worth today divided by the number of shares? That's the value or the market cap of the company. Okay, that's, you know, and then you know, all the market participants weigh in on all publicly known information and value the company. That's how share price gets set. And then it's an auction. It's a live, continuous auction. Okay. When new information comes in, the market responds and values the company differently. And so Intel announced their Q2 earnings, right? And their forecast was not good, and they you know, there had been skepticism for a long time, and then it was confirmed with both their earnings and their outlook. and all the analysts in the market just turned against them and said, we're done, we're moving, we're going to NVIDIA or whatever, right? And so the price, the gap is from one day's closing price to the next day's opening price, there being a big difference. And in this case, there was a huge difference, right, from about $30 down to under $25. And so a gap, the company has been revalued, okay? And you can see they had a smaller gap on their last earnings call, okay? A gap can be very, very strong resistance, resistance meaning price comes up to it, but it's just like a line we showed on other charts, right? Price has a really hard time getting through that as a resistance area. And if there was really good news and price gapped up, then that can be support. And that would be, what's this other one? No, Levi has a gap down as well, okay? But the same thing with Levi, here's the gap. Let's blow it up a little bit, make it easier to see. Right, notice how prices come up into that gap, but it has not gone through it. So it would take something to convince the market that whatever caused this gap has been resolved, right? Because new information came out, we revalued the company, and price has a hard time getting through it. And then they had their next earnings call here, and the market was not convinced. So if you have a gap up, it can be support. Price can come down, but it provides support at that level, and price will typically reverse back up. Here on both these examples, price gapped down, and that's a resistance. Price is having a very hard time getting back up through that gap. An indicator to see a gap. Okay. Gap up with Starbucks. There we go. So if you follow the story on Starbucks, they got a rock star CEO from Chipotle. Right, market loved that news. They were struggling. They gapped down. Remember, gap down. Here's resistance. Had a hard time. Right. Oh, we got a brand new CEO and he's a rock star. Right. Price gapped up. Right. That can be a support area, even though price goes up and down. Right. It's not going down through that gap. Right. Now that resistance area or that support area here can be all the way to the bottom of the gap. Right. But here it's the top. Right. Now they're going to say, what's this guy going to do? Right? And what do you think happened to Chipotle when their CEO went over to Starbucks? Yeah, they had a gap down. Okay, watching the clock here, want to honor the time. The other thing you can see forming here on Starbucks is that we talked about it on Bank of America. And let me just blow up my thing a little bit here so it's clear. It's a wedge. I just use a trend line. Even current here, you can go down here or here, right? It's this narrowing of price action. That is like, I call it a coiled spring, right? That is pressure building and building and building and building. When price breaks out of this, there's typically a follow through. There's some momentum to it, at least for a handful of days. Right? That's just a long-term observation. Now, if we were to break down, I don't know that I'd want to go short into a big support area, but if it were to break up, that might be good. And I can also, just zoom out a little bit. Are there any really big reversal points that would be potential resistance? Oh, back here, right? But that's kind of far off. If it were to break out here, right, and say it does a break and we're at like $97, will I take from 97 to 108? Well, sure, I'd be happy to go long for that. Yeah, okay, that's enough profit for me. So wedge. So we've talked about resistance, support, channels, channel breakouts, gap, up and down, wedges, right? Fibonacci retracements, Fibonacci extensions, right? These are all things you can observe on the chart with absolutely no indicators. And I do use indicators. And I'll show you the simple indicator set. I still think it's super important to be able to see price action. But here's what I'm using. You can see I've got a very cleaned up, simple version of Ichimoku Cloud. I've got a 50-day moving average, simple moving average, a 200-day simple moving average, and a price oscillator. That's it. Right? I like the 50 and 200 can be when they cross. That's golden cross. That's big. They can be support resistance areas as well. The momentum tells me, hey, how strong is the momentum of the up move? Right? Ichimoku cloud confirms an uptrend, and it can be also the edges of the cloud support and resistance areas. So that's what I use. It's simple, right? I can still very clearly see price action on my chart. It's not obscured. All right, I got 8 minutes. So if you got a couple symbols, I'd be happy to offer my analysis, and then we'll talk about it. Hey, if you like what you're seeing here, what I'm doing, how you can get some more. Oh, and Dave has already posted that link. So I got a flash sale, right? And since he's posted it, I'll go show you while you're thinking of any indicators you'd like, or any charts you'd like me to look at. I run an alert service where I send out, trades, equities. Hey, here's the trades I'm taking. Here's all the details of the trade, the stop, the entry, the target, right? An option contract suggestion if you like to use contracts, right? And we have 4 days a week, Monday through Thursday. We have a live session in the morning. We look at the market, we analyze trades, we update the open live trades, right? The list price for that 647 for a year. You guys are new, you don't really know me. So there's an introductory price, $147 for a full year, 80% discount, because I'm betting, hey, you'll come with me for a year, you'll like it, and you'll then continue for years to come at the full price, right? There's no indicators, no software needed, just to fund a brokerage account, 2 to 3 picks per week. We got the live sessions Monday through Thursday. It's optional. We have recordings, right? You can attend those or not. You're going to get the alerts anyway. The alerts come out via email, and we now use Telegram versus text. I got some training material you get right away for risk management and for options. I offer one-on-one consultation, and we've got a bunch of pre-recorded short training topics very similar to what we went through today. So that's all $147 for a full year. Okay. And I don't see any new symbols coming in that anybody would like. Oh, there it is. I had to scroll down. What do I think of the Heikinashi? I've used them. I don't think I need them, right? I like to keep things simple. There's how many different candlestick, right, or price chart types are there? There's a lot, right? There's a lot of there's thousands of indicators. I've zoomed in. Hey, this works for me. I understand this. It's repeatable, so I just use the candlesticks. Okay. So Jason wants to look at Amazon. All right. So what am I going to do first? Big picture. So Amazon, everybody had trouble during the pandemic. It recovered, and it's almost like this really multi-year channel, isn't it? Right? We just quickly go. Amazon's been in a multi-year channel, kind of like. Let's get rid of one of these. This. That's a big channel with a big range. Okay. What's it doing now? So okay, it ran up, it corrected, it's starting to head up again, and we can see right here, hey, this is where the 200-day moving average, I kind of like the price situated here. Okay, so gap down on earnings, people weren't happy, they recovered, that was resistance, now it's through it. Okay, that's significant. It worked its way through the resistance of that gap. So once it moves up past that gap no longer matters. It's irrelevant. So we get rid of it. Okay. All right. It had a bit of a breakout above here, pulling back, and now it got down to the 50-day moving average, pretty close to the 200-day moving average, and it's heading up. So this could be a short-term, long. Here's the next resistance level, a place where maybe it could fail. So, maybe a short long up to here and then see if it can get through it. We got earnings coming up probably on about the 24th, so we got a couple weeks. So that's not bad. All right. Next person, Key, wants to look at IWM, the Russell Index, small cap. All right. So it's funny, the S&P 500, and let's just go, here, S&P 500, SPY, right? Zoom, come on, zoom, big picture, right? It's had a good couple years, record highs. NASDAQ, auto zoom, good couple years, record highs. Russell, small cap, yeah, not so much. Okay, record highs back here in 21, and it's just kind of languished. Looked like it was going to take off. We've been watching this, right? Pretty good. Oh, and then it pulled back to 200, and losing, right? A lot of the analysts keep saying, hey, small caps are going to be where it's at. And it kind of made sense, right? Because all the gains were in the, big cap and NVIDIA and all that. But this has been tough, right? It just never has materialized. And, it's choppy. It's choppy, moves up, moves down pretty fast, down to the 200, moves up, down to the 200, moves up. Now it's totally channeling. It's a tough one to trade right now. So I would have to be really, really convinced that there was a trend starting on the Russell before I was ready to jump in. And, that's another tool you can use. We use what's called Dow theory, right? A trend, and, what's going on here, an uptrend is a series of higher, low, new highs, higher, low. So I would need to see that continue, right? And if you're going to do this, you can observe prior behavior, right? And you go, those pullbacks are pretty big. So you have to run with a pretty loose stop. You have to have a lot of patience to sit through, because if okay, it's going, we get in here, it may pull back like this before it continues. And that's a tough slog. So I'm not crazy about it unless something really, really changes, but that's how I would approach it right now. All right. I think I am up against my time. So, wow, thank you, traders, for your time. I hope you found it useful and valuable. And if you did, there's the link. Dave has posted it. I'd love to have you come join us on a daily basis. And let's go make some money in the market. All right. Thank you, David, for inviting me. And take care.